Hi, this is Vijay Bambani here, and I hope you're keeping your finger on the pulse of the market and the market's treating you well. In this video, I will again take up a couple of more questions that my viewers have asked, and these are, of course, related to gold and silver, but they're ancillary to gold and silver and not directly about gold and silver. So, this critical aspect about what if I don't want to invest in bullion? Can I really buy mutual funds that are specific to gold? And should you be buying gold financing companies like Muthoot Finance or Manappuram Finance, which are basically linked with gold prices and or stocks of companies that deal in gold jewelry? So let's take the pros and cons and answer this question or these questions rationally. Gold specific mutual funds. If you don't want to buy bullion, you don't want the hassle of storing physical bullion and incurring costs on storing physical bullion by hiring a vault or whatever, then gold mutual funds would make sense because you would get these mutual funds in electronic format, which would be directly credited to your demat account, and therefore no recurring charges of physical storage or threat of theft or pilferage would bother you and rob you of your night's sleep. But do remember that if you read the mutual fund charter, the charter is nothing but the equivalent of the memorandum and articles of association of a limited company. Now, if you were to read the mutual fund charter, you will realize that a fund manager is authorized to hedge some of the positions by taking contra positions or opposite positions in the commodity exchanges. So if the fund manager is holding physical gold, he may be allowed by the charter to short sell some futures in the commodity exchanges so as to protect himself and his portfolio from downside risk. Do read up the charter of the fund in which you're investing the money. The higher is the permission granted to the mutual fund manager to take a hedge, the more discount there will be to the NAV. Because the market assumes that not all hedges are going to be profitable. As a matter of fact, history has shown us that hedges in the past have unraveled in extreme market volatility, and the fund has actually lost money on hedging, whereas it was originally intended to protect the NAVs, which is something that happens to many ETFs also. You will realize that quite a few gold ETFs are actually trading at somewhat of a discount to the MCX price. Now, for the gold financing companies, do remember that the business model of these companies is basically simple. They are like a money lender, they are like a pawn shop, all right? By pawn, I mean PAWN, not the other one. They basically keep your gold and lend you money against the gold at a predetermined market price and give you a certain component of the value of the gold as loan. 100% financing is not allowed. Now, the difference that they hold back is called a haircut. This is the cushion that the NBFC or the non-banking financial company keeps so that it is always protected from declines in prices of gold. Unfortunately, bullion tends to be fairly volatile during market bottoms and market tops. So do remember that there have been instances when gold prices have plummeted or fallen so fast that it would actually pay the borrower to default on the gold loan and saddle the gold on the financing company. This does not happen very often, but do remember that in financial markets, stranger things have happened. So if there is a big steep fall in gold prices, then of course it is possible that defaults on these companies would rise, and therefore the stock price might just react or correct lower very sharply. Do remember that these gold mutual funds or gold financing companies are basically deriving their value of their investments, which is the share price or the NAV. They are deriving their value from the underlying asset, which is gold. As long as gold is going up, there is no problem anywhere. As a matter of fact, in financial markets, as long as people are making money, nobody is actually complaining. It is when losses start to occur that problems actually commence. So do remember that if you are trying to steer clear of gold and go into mutual funds, which are gold specific, or financing companies, gold financing companies, that their wagon is hitched to the fortunes of gold itself. Ditto with the jewelry stocks. As long as gold prices are rising and there is a frenzy for buying gold, jewelry stocks will also do well. But then historically I've seen them to be far more volatile than my risk appetite permits. And mind you, I've been trading this market for approximately 3.5 decades now. I should have a strong gut, but the movement that I have seen in some of these jewelry stocks is gut-wrenching. So I would tend to basically avoid jewelry stocks, but yes, gold mutual funds and gold financing companies you may consider, but do your due diligence. Even with ETFs, download the charter, read the document very carefully and see how much of this money is to be kept as free reserve, how much is to be invested in physical gold underlying in the mutual fund, and how much is the leeway allowed to the fund manager for hedging. As long as you are careful and look after your own interests, the possibilities of the market delivering an unpleasant surprise to you remains fairly low. On this cautious but profitable note, I will bid goodbye to you in this video till we meet again in my next. Don't forget to click like on this video if you're watching it on YouTube. And in the comment section, do let me know what you think about this video and what you would want me to record in my next. Do subscribe to my YouTube channel and help me reach out to traders looking out for a knowledge-based trading and investing system by referring these videos to your family and friends. Do take very good care of yourself, your family, your trades and investments. Have a very profitable day. Thank you for watching this video. Vidya Bambwani. Bye-bye for now. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.